Hey everyone, welcome to the weekly review. I just did a, let's call it a market activity review and posted it a bit earlier. And things are very uncertain. And because things are uncertain and everyone knows it, things do not become less uncertain. But that means, in essence, that we go sideways. Uh, we set the range high, we went a bit higher, got rejected again, set the range low. I think we will retest this range low and potentially go even lower. Like actually, this may not be the range low. I think this area here will be it. Uh, if you saw in the market activity thing, there's a bunch of toppy names. There's also a bunch of names that could go a bit higher, but or could have bottom, but that's a lot smaller. And for now, we have the taco thing now. Trump knows about the taco thing, and because he knows about the he chickens out, he won't chicken out. We just had the tariff increase on steel and aluminum to 50%, basically a double of the tariffs on Friday, or not on Friday, some during the weekend. Uh, and basically, we cannot go up. Things like Nvidia and let's do Nvidia. Um, basically, Mag 7. Let's go Tesla, no, not Tesla specifically, but Nvidia, Google, they've all been going sideways for almost a year now. Uh, some a bit higher, some a bit lower, obviously, but we haven't really gone anywhere for a long time. And this is the expectation moving forward as well. Like there, because of this uncertainty, nobody knows how the market will react. Nobody knows what Trump will do. uh, they will not commit to either a bearish bet or a bullish bet. They will play the swings in this range, and kind of some of them will profit for it, some of them will not. But in essence, the fact that uncertainty exists, but we have a relatively hedged market, we have a simple way of playing this uncertainty, and that is to not commit. When we get too overextended up, this type of thing happens, like what we saw here. When we get too overextended down, this type of thing happens, like we saw here. And this is just the beginning. Like we could have an entire summer worth of this type of range bound movement, and it's the simple explanation. Like I've been thinking about this for the last couple of days, and I think I was overthinking things before this. The simple expectation and simple outcome is that nobody's going to commit to bearish things because things are still rolling along nicely and we don't have breakdowns in hard data. But also, nobody's going to commit to bullish outcomes because we still have the Trump uncertainty effect. We don't know what's going to happen to the tariffs after July. Like I said last week, we are past the halfway point of the tariff delay, almost a month and a week out to when we have to have an outcome because of the um, court decision to block the tariffs, which has been revoked. But because it happened, trade negotiations are going to break down most likely. Because why would you negotiate and sign a deal that is binding if you actually put it on paper and sign it, and then court revokes the tariffs and you're stuck having to enforce those decisions that you made for a trade deal. So there will be no trade deals. Trump is likely to lash out. We're still going to get uncertainty and volatility, meaning we have a headline market. Sometimes we go up because of the headline, sometimes we go down because of the headline. And all of this speaks of uncertainty. And in uncertainty, people do not commit. It's not necessarily that it's going to become bearish or it's going to become bullish. Is that it's not going to become bearish and it's not going to become bullish. And that leaves us in a range bound market that will go sideways. This being said, short term, it's more likely to be bearish than bullish. We are, I said this level, like the yearly open, is going to be the bull bear pivot in the short term, and then we have the this is the AVU up from the yearly AVU up, which is likely going to become the range bound, the range lows at some point in the future. And now, because of the increase in the tariff for steel and aluminum, because Trump found out about TACO, he's going to react to that, and he's say that he's not going to chicken out. He's probably going to escalate this situation a bit. So now we are in the part where we go down, and minimum target is this 573 area. I would love to see us retest the AVU up from the year start plus the Liberation Day close China deal gap levels. So this is, if we get to these levels, to this area here, I think it's an easy long. Come on, man, click this fucking thing. So if we hit this area here, it's an easy long, and expectation is that we will go back to the 600 area at some point later, because when we get escalation, eventually we get de-escalation and we go back up. Uh, this will only change under one circumstance, and that circumstance is bearish, meaning if the hard data breaks down. If the hard data breaks down anytime in the next month, 2 months, and so on, expect this to uh, it will become less likely that this area holds. So if we get one, inflation spiking, which is possible because tariff effects are coming in the next month or two also, or jobs data breaks down or economic data breaks down, there is a chance that this area does not hold. But until it happens, range bound movement, and that's kind of it. So yeah, this is summary of it. Not a lot to talk about aside this. So hope it helps. Have a good one. Bye bye.